Welcome to another section of RAD accounting tutorials. Is If today is your first time on the channel, subscribe to the channel for more videos. So today I'm here again with a question on bank reconciliation statement. On my previous video, I solved a question on bank reconciliation statement where the questions were given in statement form. With this question, the question has given us the cash book and the bank statement. So bank reconciliation statement questions normally comes in two forms. It's either it will be in statement form or you'll be given the cash book and the bank statement for you to prepare your adjusted cash book and your bank reconciliation statement. So that is the question that we are going to tackle today. Before I continue with the question, I want to explain this to you so that when I'm solving the questions, you understand what I'm doing. So, where with the bank reconciliation statements, in my previous video, I said it and I'm repeating it again. When we credit our cash, that's if the company credits its cash book, when the company credits its cash book, so let's assume this is our cash book. That's the company's cash book. When we credit our cash book, that is when we issue a check. That is when we are giving out a check, we are going to credit our cash book. When we credit our cash book, our bank account will be debited. Our bank account will be what? Debited. So this is our bank statement. Our bank account will be debited. When we credit, our bank account will be debited. That is, we are withdrawing. So again, I said the bank account is a liability to the bank. Our bank account is a liability to them. That is why, and the double entry principle says that if liability is decreasing, then we should what? We should debit it. And if liability is increasing, we should credit it. That is why when we withdraw from our bank, it is debited. That is why when we deposit money into our bank accounts, we receive a message saying our account has been credited. Our account has been credited because the bank's liability has increased. You've given your money to the bank. So now the bank is owing you. So it means the bank's liability has increased. That is why they are crediting your account, showing that their liability has increased. So with the bank reconciliation statement, when we credit our cash book, the bank debits our account that we have in the bank, showing that we have withdrawn some amount of money. Their liability has decreased. So when we credit with 50 cedis, they also debit with what? 50 cedis. That is the credit side. When we receive check or interest, we are going to debit, because the double entry principle says that we should uh, debit if we are receiving. So if we receive check or if we receive interest in our bank account, we are going to debit. But the bank is going to what? Credit it. Because when we receive the check from the customer and we present it to our bank for deposit, we are going to deposit that check into our bank. So the bank is going to have our money, which means their liability is going to increase. So when we receive, we will debit, but then the bank will credit. So anything that you see on the debit side of our cash book, we should see that same amount on the credit side of the bank statement. And anything that we see on the credit side of our cash book, we should see that same amount on the debit side of the bank statement. Yes, we should see that on our bank statement. So that is it for the cash book and the bank statement. When 50 cedis is on the credit side here, we should see that same 50 cedis on the debit side of the bank statement. When we have 100 cedis here, we should have that same 100 cedis on the credit side. That is the cash book and the bank statement. So with this explanation, I believe you can get the question that we are going to do. So we are going to do the question, then within the question, I'll be explaining some things for you to get what we are doing. This is the question we have. It said, Akosia Kisiwe's cash book and bank statement for the month of August 2022 are given below. So this is the cash book and the bank statement. So this one is not a statement form, so I can't read it. But then I'm going to put this here, then we are going to solve it. So one thing, when you're given this question and you are asked to prepare the adjusted cash book and the bank reconciliation statement. So first of all, let's write Akosia, the name of the business, Akosia Kisiwa. Then we write our adjusted cash book. Next. So when you have this, you start with the opening balance. That is the closing balance, which is in the cash book that has been given to you. The cash book, when you look at the cash book, there is an opening balance over there. There is an opening balance over there, which is, sorry, there is a closing balance over there. That's the balance brought down. The last balance brought down will be the opening balance for your adjusted cash book. You don't use the opening balance at the top, which is the 12,500. You don't use that. You use the closing balance, which is the 19,500. That would be your opening balance for adjusted cash book. You don't use the first one. If you are using the first one, then it means you have to enter all the figures that are in the cash book again. But then we are using the balance brought down at the end, showing that all these cash book transactions has been affected. So we can't use the first one. Therefore, we are going to use the last one. So always when you are giving this cash book and bank statement, always use the balance brought down at the end. So our balance brought down. Let's write our date, which is 19, which is 19,500. So when you get, after doing this, now you have to compare. Here is no statement from where you have to read and know whether it is credit transfer, standing order, or the Senate check. Here you have to compare the cash book and the bank statement which has been given to you. Let me show you how you do this. When you are preparing your adjusted cash book, compare from the bank statement to the cash book. Again, compare from the bank statement to the cash book. Don't compare from the cash book to the bank statement. That is when you are preparing your adjusted cash book. You have to compare from the bank statement to the cash book. When you compare from the cash book, to the bank statement, you get it wrong. So that is what we are going to do. So we are going to check, we want to first record the figures that are supposed to be on the debit side of the cash book. So as I said, anything on the credit side of the bank statement should be on the anything on the anything on the credit side of the bank statement should be on the debit side of the cash book. Anything on the credit side of the bank statement should be on the debit side of the cash book. So we go to the bank statement on the credit side. So here, the credit side, we have the deposit and the withdrawal. So the deposit is the credit side, and the withdrawal is the debit side. So we are going to compare from the deposit side to the debit side of the cash book. This is what I mean. What I mean is we first come and check the figure at the deposit side of the bank statement. We check the figure there. Then we move to the debit side and check if that same figure is there. So we first come to the bank statement before we move to the cash book. We don't move from the cash book to the bank statement. That is when you're preparing adjusted cash book. So that is what we are going to do. So when we come here, we have 8,000 at the bank statement. So when we see 8,000 here, now we move to the debit side of the cash book and check if that same 8,000 is there. We check if that same 8,000 is there. So when we check 8,000 is here, then we move here, we can see 8,000. The next is 1,500. When we check 1,500, we can see that 1,500 also there. Then the next is 3,400. When we move to the cash book, you can still see the 3,400 there. Then we come back to the bank statement, which is the next one is 4,600. You can see the 4,600 there. Then we come back again. We check 3,800. We move back. We can see 3,800. Then we come back again. We check 100. But then when we check here, when you check the debit side, we can't see 100. So since we can't see 100 there, we have to go and record the 100 there, which is interest. So we come to the debit side and we say interest. Which is what? 100. Which is 100. Then the next one is what? 3,000. So when we check to, there is 3,000 there. That is all, you are done. You are done for the debit side. So you see, I checked from the bank statement to the adjusted cash book. I did not check from the cash book to the bank statement. When you check from the cash book to the bank statement, you realize that furniture account, which is 1,200, when you are checking from the cash book, you come to realize 1,200 is at the debit side of the cash book, but then it's not here. Which, if you don't take care, you're going to record on the debit side of the adjusted cash book, which is wrong. That is why I said you have to check from the cash book too. So when you realize when you are checking from the bank statement to the cash book, you will not even think about the 1,200 because when you are checking from the bank statement to the cash book, you don't see 1,200, so you don't check for that. Okay, so now we are done for the debit side. Now let's move to the credit side of the adjusted cash book. Again, we are checking from the bank statement to the adjusted cash book, to the cash book. Sorry. So whatever is on the debit side of the bank statement should be on the credit side of the cash book. So we move to the debit side of the bank statement and check the figures that are there and move to the cash book and see if those same figures are there. So the debit side is the withdrawal part. So We have 4,000, which is on the credit side of the cash book. 8,200, which is on the credit side of the cash book. 800, which is on the credit side of the cash book. 6,000, which is there. 1,000, which is there. So the 1,000 is Sami 189, which is also there. Then we come to the next one, which is 10. We can't find 10 on the credit side of the cash book. So we see charges. Now, since it is not, it is supposed to be there, but then it was omitted. So we come and see charges, which is what? 10. Let me put my CD signs there. So that is all. When you're able to do this, you are done preparing your adjusted cash book. That is all. So let's balance this. When we balance this, you get the total here to be 19,600. So our balance carry down be 19,590. So 19,590. Then we add to the 10 to make it 600. Come here to write our balance. It will be the same as the balance carried. Okay. So now we are done with our adjusted cash book. Now let's move to prepare our bank reconciliation statement. So we come here, we write our bank reconciliation statement as at 31st August 2022. So we are, since it is a debit balance, we are going to start with that, which is our balance as per balance as per adjusted cash book. So our balance as per adjusted cash book is 19,590. So again, I said if it is not an overdraft, we add unpresented check. So now let's go back to the question and find our unpresented check. So when you are given this cash book and bank statement, this is how you find your unpresented check. So now when you are preparing your bank reconciliation statement, now you check from the cash book to the bank statement. Get it? So when you are preparing adjusted cash book, you check from the bank statement to the cash book. But then when you are preparing your bank reconciliation statement, you check from the cash book to the bank statement. So when you move to the credit side of the cash book, you check if this figure is there, then you come to the debit side of the bank statement and check if that same figure is there. If you don't find that same figure, then it is called unpresented check. Because when we issue the check, we are going to credit our cash book. And if the person presents the check for payment in a bank, they are supposed to debit our account. That is withdrawal. But we've issued the check, we've credited it, but then the person has not presented it for payment in the bank. So the bank has no idea about it. That is why it is not found in the bank statement. So we call that unpresented check. Then you come to the debit side. The debit side of their cash book, we should find what we find there should be on the credit side of the bank. So when we receive a check and we give the check to the bank too, so when we receive the check, we are going to debit our cash book and we give the check to the bank to deposit to make deposit for us. But then the bank has not yet. So when we are making deposits, we are supposed to credit, the bank is supposed to credit our account. But then after giving the check to the bank has not yet credited our accounts with the amount. So the figure that we find on the debit side of the cash book and we come to the bank statement and we can't find on the credit side of the bank statement is what we call uncredited check. So now let's move to the question and do let's find our unpresented check. So now we are checking from the cash book to the bank statement. So the cash book, we have 4,000, which is first. When we come to the withdrawal side, 4,000 is there. When the next one is 3,200, which is also there. The next one is 6,000, which is there. That is 185. When you come here on 28, I guess machine you 185, 6,000 is also there. Then we come back to chain entry, check number 186, which is 1,000. When we come here, there is 1,000 here, but then this 1,000 is for Sami 189. So it means we don't have check number 186 here. We don't have check number 186 here, which means the 1,000, the check that we give to GNP has not presented it for the bank to deposit, for the bank to debit our account. So we call this unpresented check. So we call this unpresented check. So we've identified one unpresented check, which is check number check number 186. So the amount is 1,000. Okay, now let's move on. Now the next one is 800. When we come here, we see 800 here. That is check number 87. Then we come here 2,000, 2,000. There's 2,000 in the cash book, but then when we come to the bank statements, we can't find that 2,000. So that is another unpresented check. That is check number 188, which is 2,000. Okay, so now let's move on. Then we come here, we see 1,000, which is check number 189. When we come here, we see that 189, so I mean 1,000 is also there. Then we come here, there is 500 here, which is the last one. Then when we come here, we don't see that 500. So there is another unpresented check, which is printing check number 190, which is 500. So when we add all these, we get 3,500. Now they said we should add unpresented check. So it means we are going to add the 3,500 to the 19,590. So when we add this, we are going to get 23,090. So now let's find our uncredited check. So we have to less uncredited check. So let's go back to our question and less our uncredited check. Let's less our uncredited check. So now the uncredited check, we are moving to the debit side of the cash book and check from there to the deposit side of the bank statement. So that is what we are going to do. So please, again, we don't check the balance carry downs. As for the balance carry downs, they are not included. Okay, those are balances, they are not transactions. So now we move to the debit side of the cash book and check from there to the bank statement. When you're preparing your bank, again, when you're preparing your bank reconciliation statement, you check from the cash book to the bank statement. So that is what we are going to do. So the first is the sales account, which is the 8,000. So we are checking from the debit side to the deposit side. Because the deposit side shows the credit side of the bank statement. So 8,000, when we come here, we can see 8,000, 1,500, we can see 1,500, 3,400, we can see 3,400, 4,600, we can see 4,600, 1,200, we can't find 1,200 here. So we see that is furniture account. So furniture account, which is 1,200. Then the next one is 3,800. We can find 3,800 here. The next one is 3,000. The last one is the 3,000, and we can find 3,000 here. So the only uncredited check we have in the question is 1,200. So we minus the 1,200 from the 23,090. Then we get 2,1,890. That is what we get. So this amount is our balance as per bank statement. So when you look at this balance 2,1,890 and you go back to the question, when you look at the bank statement, you realize on the balance column, you realize 2,1,890 is the last figure. So that is the balance as per bank statement. So when you solve this question, the balance that you get as your bank statement should be the same in the question. If it is not the same, then probably there is a mistake somewhere which you need to look for and rectify. So when you are given a question on cash book, bank reconciliation statement, where you have the cash book and the bank statement, this is how you go about it. Very, very easy. So that is all for today. Subscribe to the channel for more videos and questions. Don't forget to share for your friends to also have a benefit of the channel. Like and put in your comments. Put in your comment. So that is all for the bank reconciliation statement today. Subscribe to Rad Accounting Tutorials for more videos. See you in my next video. Bye bye.